This is Max Gagliardi. We're live for this week's episode of Talk.Energy Insights. On the run here today in the car, just getting back from a trip from Houston and Austin, and got Michael Matthews here with Ankova, tagging along, listening in. But how's it going? Tell me what's going on with the markets this week.
Yeah, it's been a crazy month. I mean, if you just think about where things are, natural gas is up 28% in the last month, and now 96% for the year. You actually have had Bitcoin, copper actually coming in, but oil's sitting at 73, Brent is at 77, gas is at $5, and the broad market essentially has been flat, kind of still just trading around in this kind of 4,500 S&P. Nasdaq and Russell, kind of the same thing. But I look at the E&P stocks up 5%, and really wanted to hit the Conoco acquisition of Shell today, of Shell's Permian
Yeah,
assets, is something that we've been talking about and writing about since really mid-June, when kind of this was more than just country club kind of commentary in and around Houston. But I actually think it's really indicative of kind of where the world's going, and kind of the reality of what Conoco was able to do is just pretty interesting. And that'd be one thing that'd be interesting. And then we can talk more broadly. I've had some good conversations,
sure.
and I think we're going to be able to get some people on the pod, probably do some recorded pods together where we co-host and have people come in and just talk about their views of how legacy energy can fit into a climate and clean tech solution as well around even gasoline and hydrogen. And there's some interesting stuff that just contacts we're building. But kind of back
Yeah.
to
So
Conoco.
yeah, what do you think about that deal? I want to hear your
I mean,
thoughts. I'm pretty interested to hear what
I
you're
mean,
thinking.
imagine a world where you can buy an asset for $9.5 billion that is throwing off potentially 20% free cash yields at below where the oil price is now. Like think back, in the shale boom, whenever you essentially had to buy assets and issue equity to develop them, and now you're buying assets and they're improving, essentially each of the metrics that Conoco is striving to get to. And what's cool, candidly, is both stocks did well, and so like the seller
Yeah.
accomplishes the goal of giving back $7 billion to its investors faster than 9.5. It'll end up being about a little under 9 billion. There's a purchase price adjustment between early July and when it closes in the fourth quarter. It'll be at least 500 million. But where the strip's going, Conoco could get this for even a better price. But
No,
what's interesting,
it's
if you take
crazy.
a step back a year ago, like Concho on its own probably couldn't have done a $9.5 billion deal, and Conoco on its own wouldn't have done this deal because they didn't have the Permian position to just integrate it essentially and pick up operations and some people, but no G&A essentially. They
Right.
the combination of Conoco and Concho created a scaled entity that one had the cash on the balance sheet to do a $9 billion deal. It could replenish itself to $4 billion of cash flow at year end, and have the operating capacity to close the transaction. And there are a lot of other buyers that probably would have liked to have had Shell take some stock, but the reality is Shell accelerating a return of that cash and monetizing legacy assets. I wrote a report about it, and I'll be recording some stuff around kind of the legacy world rhyming with the energy transition. But the reality is investors want cash back, and like if you don't have a good place to invest it, the majors are going down a path of shrinking market cap, has been what I've been saying. Like it's a and what they're essentially doing is saying we had an asset that was free cash generative, but our investors don't want to keep it, and we'll just give you the cash back from it. As a Shell's my legacy, and so I I, I think a lot of the company from an execution standpoint, but sadly, I also think of it as a company that, going back to the 90s, as we were divesting Gulf of Mexico assets and creating the predecessor companies to Flores and Rux and Apache, just Shell tends to buy high and sell low a lot.
Yeah. Yeah.
And all people at Shell probably hate that statement, but it is a legacy, and I tend to think that starting to market a meaningful Permian position into an upcycle for oil. We're kind of seeing oil do what we've been talking about on the podcast, since we started doing these in late May and then in June. I was definitely early on, oil going to 90, COVID, Delta variant and the like. But my personal opinion, not the opinion of Pickering Energy Partners or what's reflected, is we're still going to a much higher oil price, and we're seeing inventory levels draw down rapidly through September. I'm a bull on the commodities, both sides, and the transition. You're going to hear a lot of politicians talk about high energy prices for in Europe.
Right.
You're already seeing it. We're going to see it here. The North is going to suffer. We've had a perennial lack of investment in natural gas because gas was at 250 and there wasn't capacity, and you can't build pipelines in the U.S. And I just think that we're the underinvestment in the sector and the loss of now another generation of people with the number of people we fired. It's just the outcome that almost seems inevitable. And these conversations that we have, and really what I've coined and adopted the phrase that my observation is we're essentially in a cold civil war in America around ideas, and it's hot at times.
Sure.
I tend to think social media fuels it. I think that we're all getting triggered by the red dot on your iPhone that says you've got a notification. And I've been off social for over a year and a half, almost 2 years now, other than Twitter and LinkedIn. And I can just tell you, like, they're engineered to make us crazy, and they are dopamine triggering devices. And man, we like dopamine as people and humans. So I'm excited about where the oil sector is going. I'm excited about the energy transition, and just kind of in a good mood today. Got my Mardi Gras shirt on.
Nice.
Got my LSU socks on, and got college football firing up.
I know.
And what are you thinking about these days?
Yeah, so I was gonna say, just to go and recap a little bit. So that Shell deal, watching that asset from like Chesapeake, then to Shell, then to it's like I didn't work that area real specifically, but I did have like a guy that works with us, David Kerrigan, was over that area, and Mark, obviously my partner, worked that asset. So we like have seen it kind of like you're talking about the Shell, that background, like I'm looking at it from that angle, but it's kind of crazy that I don't know what Chesapeake sold that thing for, not very much.
It's the old Haley field, if I'm remembering right. Like I think it was like a legacy Delaware gas asset, like right on the top. And man, the emergence of the Wolf Camp. It's I'd forgotten, because Anadarko and Chesapeake were in that together, and that's the reason that Oxy and Shell overlap so much. It's gonna be interesting to see. I think Oxy and Conoco are going to swap assets the same way that Anadarko and Noble did in the DJ, and core up operations, and that I think is going to be the next leg for Conoco, where I'm sure the people right down the street here at Greenway at Oxy or up at the Woodlands, if they still have people up there, are already working on those. This is what my baby's worth. This is what your baby's worth. Let's do some swaps. And so, I think that's going to add value too.
It's just interesting to watch the cycles through these asset sales and then these mergers of these companies. I mean, being around it and then seeing how everything's evolving. We talked about last year a lot. I feel like last couple of years, this, people are going to have to merge, and there's going to be consolidation, and we're really seeing it now. And then, but at the same time, now we're seeing smaller private guys wanting to scoop up assets and buy things as well. And so it's like, it's just this cycle that we're in. And I'm excited because of the churn. I think that as these big companies merge together, they'll then shed off assets, which will cause the small and mid-sized independents to gobble those up. And that's great for what I do. And we're already seeing it. We've got clients doing exciting things, making acquisitions this year. We've done been advisor either on the buy or the sell side for our discipline, not advisor for the overall transaction, but for the midstream and marketing stuff, we've helped advise on over $1 billion of transactions this year. I think by the end of this year, that number could be at closer to 2. We've got a lot of groups looking to buy stuff. We got a lot of groups looking to sell existing assets or merge, and so it's good. I mean, it's a positive. So that's fun to watch, and we'll see where that goes. But I want to talk about this, kind of war of ideas thing, and you mentioned the clean tech and the renewable stuff, because if you're on Twitter or if you're on even LinkedIn, I mean, it's getting like fairly hostile. And this is a topic that we've talked about a lot, which is kind of like, hey, you can either get on board and try to play in this space and see where things are going, or you can fight it. And I think where people in the oil and gas side are getting cynical and where they're, I guess hostile is the right word, but especially like on EFT and on Twitter, is that a lot of these things just they're getting pushed forward, either don't make sense or they're, there's just a lot of like when you peel back the onion for these renewables projects and some of these green projects, it's like, is this really meeting these stated goals, or is it just offshoring carbon, all these other themes? But man, it's just accelerating in terms of the war of ideas.
Yeah, it's a when I hear people say it doesn't make sense, that means you need to have a conversation with someone. And the thing that I've been trying to find is it's hard to find people on the other side. Like of any idea, I just don't know them. Like we get in, and it's an interesting thing of like I'm actively seeking, those conversations and trying to understand, both sides of the energy transition. And I've had, legitimately lobbyists that I've sent messages to that are on the clean side that say, we don't talk to anybody that's oil and gas associated. And then, we're doing work on carbon.
Just the word the clean side is like triggering to.
Yeah, no, it is. Well,
right?
Climate.
Like,
I think it actually is.
What does clean
climate.
even mean?
I think it's a climate question. Like the underlying first derivative is, do you believe in climate? And I think it's hard to not see that is the prevailing sentiment of people in the world. And so like there's a degree of technology. No, wait. Let me just finish. There's a technology question of is it happening, and then there's a question of belief. And the is it happening is not what I'm talking about. What I'm talking about is there's a prevailing sentiment of belief, and that's what I mean by climate. And like the climate issues are all around the really Paris Accord of meeting and being below a 1.5 C change in temperature globally, and then the emissions associated with that, and how does the economy work around it. And the simplest solution is to find a way to at scale pull, if carbon is the issue, pull it out of the atmosphere. But whenever you talk to anybody on the climate side, the green side, the environmentalists, they think that's an extension of the fossil fuel industry, and parts of the fossil fuel industry should be extended. But that you can't hold both those views on Twitter. Like I can't have the view that like climate change is happening, because there's going to be people like, oh, Hike's the climate guy. I'm also ragingly bullish on oil prices, and I'm actually dramatically scared about the impact of some of the projects that are being invested in on the clean or climate side, because the returns are for shit. And like I see so much money going in that direction that like people, when you talk to anybody in private equity, they're like, man, I can raise a fund in a heartbeat for a climate deal or a storage deal or something slightly cleaner than the legacy midstream or legacy fossil fuels. Problem is, that's when there's too much money someplace, that's not where you make money. Like frequently the best places to invest are the places where capital's scarce. But that's kind of where the oil and gas business is today. And so, we looking at Equinor as an example, so formerly Statoil, they bought into the U.S. with, deals in Appalachia for, I think it was like 3.4 billion, bought Brigham, for 4.4 billion, bought into the Eagle Ford with Talisman. And now Equinor's resilient oil and gas projects generate a 30% return, but their renewables projects are, I think, 4 to 6%. And it's like, I've written it, it's like, that's the things that make you go, like how is a resilient oil and gas project multiples of the return of a renewable project? And you can say that you want to do both equally, and it's and not expect returns to degrade over time. So
Right.
it's an odd and interesting time, and I'd love to be in the boardrooms to kind of listen to where the opportunities are.
Yeah.
So, yeah,
Well,
but when you wanted to
unpacking.
hit me on
Go
climate,
ahead.
let's unpack
Well, let's
climate.
real quick on this.
Yeah.
Well, the thing about climate is that I think where it gets to is obviously what you said is true around sentiment, and that's where things are going. And I think that the challenge is there's a lot of challenges. So I read that book Unsettled. Have you read that? We talked about that one yet on this?
Yeah,
Did
totally.
you end up reading that book?
Yep.
And I think what the point that I took away from that is, number one, it's complicated, but we do know obviously that CO2 is a greenhouse gas, and that the planet will warm if we put more CO2 into the atmosphere. I mean, that's just scientific fact. I mean, we know that's what CO2 does, right? So there is really no debate, I don't think, around if CO2 levels increase, could that have a warming effect on the planet? I mean, I think that's pretty straightforward. I think where it then becomes, the complexities and the nuance of the topic is that, okay, so what does that cause? And I think what you see a lot of in the media, and we see people on the green or the environmental side clinging to this narrative, is that they want to tie it to natural disasters or to deaths. And I think guys like Alex Epstein have done a really good job of being like, actually, it's negatively correlated. Like the more CO2 we put in the atmosphere, the less people are dying because of climate-related deaths. And that's just also a fact. Like you can look at over time, the more we put CO2 out, the more we industrialize our world.
It's a correlation without causation, is what I would say.
Right.
But
his point is that you can't tie there's really no statistically significant evidence tying these weather events and all these catastrophe events to CO2 levels rising. And so that's one issue, right? The other issue is that there have been times on the planet where we've had 25x the CO2 that we have now. And it was a very lush and more livable planet, some would argue, because of the amount of, it was like we were in a tropical rainforest planet. So
and those big dinosaurs that would eat us up.
Yeah, huge dinosaurs.
And big insects,
right?
Big old insects.
Yeah,
we don't.
Size of cars.
That would not be a good outcome.
But it gets back to the rate of change. Then it becomes that's the question. And so it's okay, rate of change. And so you get on that path and you look at China. And I think it's the other day I was looking at this and it was China, India, Russia combined, add a couple other countries in there. And then you say, okay, this is well over 50% of where the CO2 is coming from. And then you start to unpack all the things that are happening at for example, tying this all back to North American E&P companies, right? And the restrictions and the starving of capital and all the things that are happening. And you say, this isn't going to make an impact. And so you just have to, there's so much nuance in this overall topic. And I know I just bounced on a lot of things, and each one of those things I just said, you could go do a deep dive on. But I think that's the problem, is that this is an incredibly nuanced, very, very nuanced topic that is broad brush strokes when it comes to policy, when it comes to investing. And so now we're in this place where, because of the sentiment of where it's at, I read a tweet the other day that said that there's an insatiable appetite for green debt, right? People are issuing the debt, and it's they can't, it's getting, people are wanting to take this out and, subscribe those notes as quick as people can issue them. And so it's just fueling this behavior. And so, again, I'm kind of stream of consciousness, but tying it back to your point of all this investment. So because of all those nuanced topics, we have this broad brush mandate to decarbonize, which for a lot of people will say it's not going to have an impact because of the China and Russia thing that I just mentioned. But now it's fueling all this investment into these projects. And again, it's could end up being a big bubble, and it's going to be a lot of distortions, I think, that come from this. And so I don't know that I have necessarily a point on that ramble, but I guess my point is that it's very complicated, and trying to understand how this is all going to play out is extremely interesting to me. And I can be cynical on both sides. I mean, I could even be cynical and argue with oil and gas people for some of it, but primarily when I see people talking in broad brushstroke things about very nuanced topics, that's where I always have to pause and try to unpack it and figure it out for myself.
Yeah, so I'll share some perspective on three things you said. First thing, if we export the entire U.S. oil and gas business, because we're a cleaner producer, methane and carbon equivalent emissions, you would triple the emissions globally if we just said even load level, take our 10 million barrels a day, take our gas, take our NGLs and just put it out in the world. Emissions globally would triple. It's a bad idea. It's that structurally a bad idea. You actually want us on that wall and need us on that wall, to use a Few Good Men analogy of like, we're going to be cleaner. And I think that's part of what Conoco did with Shell, is like, they're going to be clean enough, and Shell knows that there will never come back to them that you just you sold your carbon emissions to some dirty, company. Like, those assets will get better underneath
Right.
Conoco. The second thing that you said is, China. Like, the reason China actually had so much coal growth is they had so much demand growth for electricity. Like, China was actually the fastest growing country from a renewables installation globally over from 2018 forward. And you can see it in the BP Statistical World Review. I can send you a link, just DM me. Like, I'm happy to send it to anybody. But they were growing power and electricity demand so much that they had to add coal as well. And now,
Right.
I at a clean tech dinner I was at with 30 people that don't really like the oil and gas space last night in Houston. I can tell you, like, they asked, would Houston be the leader of the energy transition? And at my table, I said China's going to, because they're not blessed with our hydrocarbons. Like, they're not
Right.
in the same setup. Like, they are in need of renewables because that's some of what they have. And each geography is going to be blessed with its own things, and that's where the world should go. So, like, I actually think people bash China too much. I think that there's actually some degree of, they've actually been more of the reason why solar is so cheap. There's flaws in it though. Like, try to get a responsibly sourced photovoltaic cell, and I can tell you, if you look at Maxion, their legacy contracts are multiples of the price of the 20 cents a kilowatt hour that you can get, because candidly, some Uyghurs out working at some very low
Right.
rate in China, and that people don't like hearing that. I just talk nice about China and talk negatively about them in one sentence, because you got to be able to hold
Yep.
both those things in your head to understand what's really happening. And the final thing is like, I honestly think that there is a real disparity around environmental justice. That, like, I'm not conservative, I'm not liberal, but like, the reality is, rich folks can move away from the coast, and poor folks in New Orleans, like, where if you got like Dee was on a while ago and we talked about it, like, they're still trying to get things straight in New Orleans. And the reality is, if you have an 80-year-old parent that's lived in a place that's below sea level, like, you've got to take care of that parent, and you can't move. And like, I, however, was able to move my in-laws to Houston from mid-Missouri. Like, that's just a big difference in, like, what is available if you have the opportunity. And like, that's the thing that I think that we all ought to resonate around, is like, the justice side of what the fossil fuels industry provides is something that is truly differentiated. And like, the reliability and sustainability of trying to clean up and get better is what the industry is doing, but we're just too incremental. Like, who has the vision to say, I will be at zero emissions in 2025, and like, invest
Yeah.
way more capital? There's a ton of private capital out there that's trying to invest, that'll do a green bond with you and will like help you fund to get to zero emissions faster. I think it's just like, I don't think the industry wants to jump that quickly. But I think that's where carbon taxes are going to come in. I think that methane taxes are going to come in, and I think that we're cleaning up very rapidly. But the reality is like, I am covering the energy transition and technology space now, and there are visionaries in there that have a growth mindset, that are making investments today that may not lead to the best outcome for that company, but they're going to actually make change happen. And you could argue Tesla did that. And now you're going to have 7 or 8 other EV companies on the electric vehicle side. They're going to compete with them. But like, there are a lot of companies that are going to fail, and there's capital will be destroyed. But like, the legacy groups, and I talked about this at the table too, like, if you're successful in Shell, you know, generally you had to find a sponsor. And like, or if you're successful at Exxon, you want to make your boss look good, and that guy or gal, was successful because they made their boss look good. And so you're following directly in the path of what they want to amplify them. And that doesn't incentivize innovation from the standpoint of vision. The people with vision tend to leave the big companies. or you develop a vision and it is slow to implement. Like, it's not a revolution, it's an evolution. And everybody says energy's in transition forever, and it's been in transition from day one, and it's a slow transition, and it's going to take a long time. And that's what the majors are thinking. And I think it's so short-sighted. And it's so exciting to see some of the steps that are being taken by entrepreneurs and startups. And what's going to happen is at some point, I've said it, like, Enterprise Pipelines is going to buy a carbon pipeline someplace in the US, or they're going to buy a hydrogen pipeline, but they're not going to install it. Like, it's just not in their mindset. Like, and I think that's where the entrepreneurs can go. And that's where your business is going to go. You're going to be a carbon marketer, and you're going to be a hydrogen marketer, and you're going to be doing long-term contracts with long dated supply. I talked to a guy on the solar side that they had a PPA at $175 a megawatt hour. That was the only reason their solar company made it, whenever prices went down through the 00s through 2015 timeframe. And they couldn't talk about it because they had that one sweetheart deal with someone that wanted green electricity. It's kind of like
Right.
how Chesapeake was able to sell all those midstream contracts that you're renegotiating probably now. As you think about like what your business was unwinding some of the deals that were embedded financing on the midstream side. That's going to happen on clean tech or renewables. So
Right. Yeah, I mean, so I think that, like, for me personally, what you're going to see is, I hope that we're going to see private guys, like, when we've talked about this theme a lot, we're like the private and independent people that can be nimble and take advantage of these market distortions. And it's a distortion right now. The lack of capital going into oil and gas, we're going to need oil and gas for hundreds, I mean, really forever, right? I mean, like, that, there is no scenario, and this is, again, where you kind of, I don't know the right word. I'm trying to think of something to put in front of the word washing. I don't know. It's just like, it's almost like cognitive dissonance to believe that, like, what is it, like 90 something percent of every product you interact with every day is basically oil and gas. And so this idea that, like, we'll live in a future where, it goes to zero is just not realistic. It's, 700-800 pounds of plastic in every Tesla. I've said that before on the podcast. So it's always going to be there. And the reality is, in the future, like 100 years, 1,000 years from now, it's going to be really, really, really expensive, is like the world that we're going to, because nobody's making those investments. Everybody is, whatever the right word for washing, future washing, this idea that, like, it's just going to go away. And it's not, like, we're going to have it forever. So tying it back to what I do, I think natural gas is going to be a winner. I've been vocal about this. We're going to have it. Getting into the power side of the equation, what's been staggering to me is looking at things and really starting to wrap my head around concepts like energy density. It's like, you could drill one Marcellus well that produces 300 megawatts worth of equivalent power. To do a solar installation that's 300 megawatts, you're talking football fields after football fields as far as the eye can see to generate that same amount of power. Now, there's arguments that that's going to go for 30 years. That well is going to decline. Well, guess what? I can drill another well right next to it. So as you start to look into these topics and think about where the world is going to go, there's just some things that aren't realistic. Now, I'm not saying we don't innovate, and that we're going to innovate. And the money is going to get poured into these technologies, and technology has a way of shocking people because it's gradually then suddenly, and things can change. And I'm not saying that things won't change, but it'll be a world where we're always going to have hydrocarbons in some capacity. It's probably going to be natural gas because we have so much of it, and then but I do think that, like, we're going to transition in the sense of there will be technology that changes. And I'm kind of rambling again on this topic, but it's just so complicated. It's hard for me to put this into a concise, like, one sentence answer. But, like, the entire podcast journey for me has been exploring these topics and trying to be open-minded. And there's some days where I'm super open-minded and I feel real positive about some of the changes that I see. And there's other times where I feel real negative about the changes that I see. Because it's just such a polarizing topic, but it's an exciting topic to be doing podcasts about it. It's fun to talk about this stuff.
So what were you doing in Austin and Houston?
Yeah, so in Houston, I did the Bitcoin meetup down there, and they do like a once a month. Unchained Capital throws that on, and it's really kind of turned into like this oil and gas and Bitcoin people. Although it wasn't all oil and gas, but there was a lot of energy guys down there, oil and gas guys there, and so that was really interesting. and they had speakers come up and they had a panel, and the panel was pretty oil and gas focused. I mean, I think it was a guy that's traditionally was an E&P guy who's now doing mining. They had a guy from Upstream Data that builds the containers, the data centers for mining on oil wells. They had Ryan Turner spoke. He's the principal of I'm going blank on the name of his firm, but he used to be the CFO at AEP. So I worked with him back with Aubrey. He was one of the CFO there. Stronghold Resource Partners, I believe, is the name of his group. But they've been looking at the Bitcoin space. And then we had another group, one of the principals from J Energy. So his partner was the guy that I had on my last episode. They're doing Bitcoin mining up in Wyoming, and so that was the panel. And these guys talked, and it was really interesting. And then it was just cool to like meet all these people in our space, and it's a very similar narrative, which people keep saying, "Hey, I started looking into this, and it's really exciting." And so that was fun. I think it would be cool if Oklahoma City would start doing one. I would love to, even if it's not once a month, maybe once a quarter. But that was interesting, and so got to meet with those folks. And then in Austin yesterday was meeting with a client of ours that's a new client that's doing a lot of exciting things, making some big acquisitions, and got to have dinner with those guys and visit with them about where they see the world. And there are some people out there that are very excited and optimistic about oil and gas and what's going to happen. And it's good to hear those stories too. So that was kind of the trip, and I felt pretty productive. Although I was out last week and traveling this week, so I'm tired. But I'm productive.
You're putting the miles on in the car too. Like, used to be you could fly all these places, but Southwest just doesn't have enough flights anymore. Like,
I flew to Houston, and Michael drove down to Austin, and I took the mega bus over. Should have done Vaughn Lane apparently, because I think that's nicer. Everybody said, but it was like $35. So rode over there, and then I'm riding back with Michael. It's not that bad. He said he made it down here in like 5 hours and 45 minutes on the way down. So we'll be back kind of mid-afternoon. But yeah, the flights were terrible. I tried to fly back from Austin, and it was like expensive. Like, I want to say for a one way, like $500, and with the layover in either Houston or Dallas. And so I would have had to leave at like 7:30 a.m. I only got back by like 12:30 or 1, and we're going to leave at 8 and get back at 2. So it's like, it's, the cost.
No, it's wild. Like,
that was kind of the logic.
It's the burden of COVID, but yeah, it's more difficult to travel. Flights get canceled. It's just been kind of wild getting back into the travel side and seeing the pain of just bouncing, short distances. It really is almost easier to take the bus or just drive it. I've totally done the same thing.
Yeah, I couldn't find a single rental car in all of Houston, and I tweeted about that too. And it was last minute, but I called Hertz, Budget, Enterprise, and I looked online for one other. And out of Hertz had like 40 locations in Houston, they didn't have a single car available the day before. So it just was, it was crazy. I don't know if that's back to this COVID thing, the shortage on used cars, but people are giving me all this advice. It's funny what like blows up on Twitter. It's like, I could be like, I can't find a rental car, and like 50 likes or something, or I could put out like a well thought out tweet about like the future of gas prices, and it's like crickets, like no one says anything. Or I could be like, the mega bus smells like ass, and everyone like loves it. Like, it's like 100 likes. I'm like I can't understand this website. I'm like, why do people respond to the things they want to respond to? I think half of it is people just want to interact, and it's just more of a social thing. I mean, which makes sense. It's social media, but people want to engage, and
Twitter is.
It's funny. It's funny what pops off.
We had our marketing guys in from Arkansas, and we're just talking through big picture. Twitter's an individual relationship account, and LinkedIn is like corporate. And I tend to think that the best part about Twitter is you can just be yourself, and you're going to find out who likes you and who doesn't like you. And but that gets into the Cold War of ideas. Like, all of a sudden you get pigeonholed into that, that Bitcoin gas dude who only does a podcast like a million other people that is doing podcasts. And that's who you'll be. And like, you're way more diverse than that. But we ought to choose one of these like controversial topics, and something like there's no chance that Houston will be the leader in the energy transition, and it ought to be Austin, Texas, or Wuhan, China, and then like just see what happens. Like, just like I bet we'll do some A/B testing in our own pod, just to see if we could like
Right.
choose something super controversial and just like open riff on things that probably would blow us up, and we'll get canceled right afterwards. But
Nah,
it'll be fun.
it's, we'll be fine. I think one thing that I like doing that we're doing right now is just being more free form. Someone posted
Mhm.
on I think they deleted it. I don't know if there was a comment that I read and then it was gone. I don't know if they felt bad for saying it, but it was like on the YouTube, they were like, I love you guys, been watching for a long time. Y'all need to quit asking questions like your attorneys, with these like straightforward back and forth questioning. But then I feel like I couldn't find the comment afterwards. Like someone felt bad, but I was like, hey man, I was like, tell us the feedback and we'll
no,
plan accordingly.
no, we totally are. Like we're just talking. Like, and I really like getting Max on last week. I think
Yeah, that was
Max
fun.
Jermaine has a lot of perspective. And
Yeah.
did you lose me?
Oh no, can you hear me?
Yeah, I got you. Just got a
Sorry,
message on my that I lost my Bluetooth for half a second. But yeah, I think that this just so.
You're cutting out.
Oh,
You cut
yeah,
out for a second.
yeah. The open
That's all
riff is
right.
where the opportunity is going to be, and I really do
It
think
is.
that we ought to do one of these. We talked about doing one at 9 o'clock at night after a scotch,
I
just
know.
because there's then we'll really get rolling.
Have you
Overall.
seen like I don't know if you've watched like I'm friends with like Marty Bent over at Great American Mining and he his like rabbit hole recap that they do, it's so free form and they go
Yeah.
for like 2 hours or like 3 hours and I just sometimes I'm just jealous of like how much it just looks like they're having fun, and
Yeah.
so it's like, can you get to a place where like it doesn't matter, can we just sit here and ramble for 2 hours or however long? And I think there's an audience for that. It's funny that, talking about the Twitter thing and being like the Bitcoin guy on a podcast, but like part of it is like, what does people gravitate towards? And like when I
Yeah.
put those posts out, like people really want to hear about that stuff, and so we're doing some really interesting things on that front. And I'll talk about that in a second. But back to this other point I wanted to make. We talked about the megabus thing, and the guy we were having dinner with last night, I made some comment about Twitter, and then I brought up that I had to do the podcast, and like they didn't know, and they thought that was interesting. He's like, I think I read that tweet earlier. He's like, yeah. He's like, I'm pretty sure. He's like, I saw that tweet about like the megabus thing, and then like 2 seconds later, he's like following me on Twitter or whatever. But it's just funny like how you can connect and then where that goes. But back to the creating the content side of it, like with the Bitcoin stuff, it's just people like it, they gravitate towards it. It's not the only thing I want to do, but I have been gravitating towards it because that it's such a new industry. Like there's just nobody, even the most experienced like Bitcoin mining people are like 4 or 5 years old that have been doing it at scale, and most groups are like 2 years old or less that are doing it. So it's really interesting. Yep. And I'm gonna continue to do content around it. I'm gonna start making playlists too. I want to do like a Bitcoin playlist, like a Chesapeake playlist, because we've had a bunch of old Chesapeake people on, and people like those episodes.
Mm-hmm.
And then like we could make a Max and Hike rambling playlist, but whatever, I mean. But at the end of the day, like you just keep stacking up content and putting your thoughts and ideas out. And what I've found is that it's been overwhelmingly positive, and pretty small negatives so far, at least from what I can tell.
No, I'm full of ideas and opinions, so I spend a lot of time just sitting and journaling and thinking about stuff. The question I've been thinking about the most though is like, as we go forward, like where do you think we can be most beneficial? Like there's something here, and it feels like it could scale, but like there's an opportunity to actually like truly educate. Like, do we need slide decks that we include? Like, do we need to make it where we record some things? Like I think there's a transcript that we need to do. Some people like to read stuff more.
Yeah.
And we can pull transcripts out. And so I'm just planting these things out there for any listeners that might be on still after how far we're 40 minutes in a rant. But and we've got a bunch of ideas. But if you have good ideas, like let us know.
I've struggled with like the informational. Is it you go the educational route versus just it's like somebody, and again I bring him up a lot, and it's cliche because he's like the biggest one, but it's like a Joe Rogan. Like he's pretty relaxed, but in terms of his style. But I've also learned a lot through some of the guests that he's had on. And then other guests will have on like an Alex Jones, where you're just like, this is a crazy, crazy guest to have on, and it's more entertaining than it is maybe educational. But I do think, even though he doesn't have like an educational format to his stuff, I've like learned a ton through his guests. So I think for me, we got to keep getting good guests. I think would be.
I think we just need to like put hashtag Ivermectin on this pod and just see what happens. Like, let's be like,
we'll
see if we get like.
LinkedIn.
Oh, that's probably true. We can't do Ivermectin. Let's what would be a good one that like some hashtag that we just told, like we'll just start testing, and we'll be like, okay, all of a sudden we pulled a whole new audience in because, you know, Hike and Max just talked through Ivermectin for a bit.
Like, but I talked to my friend who's a doctor about ivermectin, and it's really interesting. You know, he's like he says it doesn't work for COVID, was his take on it. He's a doctor, but he's also talked about how amazing of a drug it is. But a lot of other people says it absolutely works for COVID. So, but to your point,
my mom thinks that taking 2,000 milligrams of vitamin C doesn't make you pee lightning. But the reality is like everybody has their own beliefs about nutrition and health. But like if you give me a little bit of time, I'll tell you I'm going to lose 30 pounds in the next month. Just don't ask me in a month like how much I lost. So like but I know the exact way to do it if you want to. So just follow me on Twitter and I'll help you out on a daily basis.
I think broadening the all right, we got a call coming. I think broadening the topics is one that could really. That's why I want to do, like, I've been struggling lately with I've been wanting to just do a podcast where I can just talk about whatever I want. And part of me is like, do I just do it under the Talk.Energy branding, or do I do like Max Gag podcast or Max MKG, or take something with my name and just do one?
So here's what I've been thinking. I'll tell you one thing, and I think, and then this is the critical component. So it's easier to fill up one hole with 6 people than dig 6 holes and have them get filled. And so I really do think that we need to figure out the one place that you just keep pouring the same thing into with multiple different channels, as opposed to, you know, co-branding, rebranding, multi-branding. And you know, I underestimated the some of the impacts of the merger on like who's Tudor Pickering Holt, who's Pickering Energy Partners. And like we had a client, it's funny, long only big client that emailed both the Tudor Pickering salesperson and our salesperson saying like, how are you guys going to work together? And you know, it's just humorous. Like whenever you have those branding commentaries, like I really do think that it is like just putting it all in one basket as an individual. And you know, we've talked about the digitalization of self. I think that's part of where things are going away from corporations and into, you know, kind of where the individual works and thinks, particularly for, you know, my kids and the future. But that's a whole other topic that we can hit. But no, I really do think that there's something we can do that is like just being a forum for conversations, and then like doing, you know, we've got this interest, like we don't have to record and publish it, but we could get, you know, 4 or 6 people together and just have a conversation, record it, and then if it's good and everybody likes it, you know, put it out there.
Let's do spaces where we record the spaces. I think that would be one that you and I haven't done. I think like a spaces that's structured. You know, the issue that I've seen with like spaces in Clubhouse is that you get on and there's just like gets to be too many cooks in the kitchen. And then also like the whole like bring somebody up from the audience, and they always have people coming up and then asking questions, and that is so hit or miss. Like sometimes you get people from the audience and it's like awesome. Like they're like asking great questions, great content. But it feels like more often than not you get people up from the audience and it's just like it just gets real random, and you just never know if that person could have a good question or a bad one. They hijack the conversation. I think of more structured like spaces where it's like 3 or 4 people that we get them on and then tell everybody we're recording this, so it can be a podcast episode too. Because that's the other thing I don't like about spaces in Clubhouse is that like sometimes you hear a great one and it's just lost to the ether. And some may argue like, well, that's the point of it, but like I don't know. It's good if it's good content, like record it and put it out there. I don't know.
Yeah, now I think that there's we've done a lot of conferences and I've moderated a lot of panels, and I've been on Clubhouse and kind of got off it for that exact reason. I think it's on the moderator. Like you just have to be extremely harsh and shut down conversations, and you know, that's the that's one of the flaws of Clubhouse, in my opinion. But I do think that can be great whenever people walk up, but just need to shut them down. And
Yeah.
you can do it in a nice way or not a nice way, but like just be like, that's off topic and not something I'm interested in. Candidly, is the way I would handle it. Like, and I've done it in front of big audiences.
I've seen people
like,
shut people down. I've seen people shut people down. I've never seen people where they can't.
Yeah. So
Go ahead.
Well, you're kind of breaking up a little. You're probably getting into the
No. Well, we'll figure it out. Yeah, we're figured out. I'm getting in bad service.
Yeah, I can tell.
Getting bad service. Let's end this one. It was fun, and we'll keep the content coming. I'm glad we do these. It's sometimes it can be a bit of a grind to get it out there, but I never regret taking the time to post one of these. I'm always like really happy that we did it afterwards. And so every week we're busy, but I'm glad that we're continuing to take the time to get them out there. So I think it's been
totally
good.
true. All right, I'll talk to you later.
All right, David. Have a good weekend.